You know, you always think of those movie scenes, right? Duffel bags of cash,
Yeah.
shady alleys.
The classic image, yeah.
But it's kind of fascinating how even now with all this digital stuff, criminals are still using some pretty old school methods for things like money laundering.
Oh, absolutely. They just mix it up.
There you go.
Combine the old ways with new tech opportunities.
Right, they weave it together.
And this recent $15 million bust in Hong Kong, it's like a perfect example of that blend.
Totally. So today, that's what we're diving into, this big Hong Kong operation, law enforcement taking down a pretty significant money laundering ring. We've got news reports, police details, the actual techniques they were caught using.
The source material looks pretty solid.
Yeah. So our mission here is to really get into the, let's say, the nuts and bolts of how it worked, especially that crypto connection.
And what it tells us, about financial crime right now and regulation in this whole crypto space.
For sure. Okay, so $15 million. That's a serious amount of money.
Not pocket change, no. The operation itself wrapped up around May 15th. They were 12 people.
12, okay.
Yeah, 9 men, 3 women. It was cross-border, too. Arrests in mainland China and Hong Kong.
Wow.
And a total laundered HK $118 million, so yeah, roughly 15 million US dollars. It just shows the scale, right? The potential profit in these schemes.
Makes you wonder how much is actually flowing around undetected, and where were they running this from? Some high-tech bunker.
You'd think so, right? But no, reports say it was basically planned out of a regular apartment, a residential unit in Mong Kok, which is a really busy area in Hong Kong.
Huh. Just hiding in plain sight. So what was the method? How did they actually move the money?
Well, this is where that blend comes in. The core strategy involved recruiting people, sometimes called stooges.
Right, mules, basically.
Exactly, to open up bank accounts. And not just a few, over 500 stooge accounts in total.
500, that's industrial scale.
It really is. It's a deliberate way to complicate things, create this huge, messy web.
So the dirty money, likely from fraud, goes into these hundreds of seemingly normal accounts.
Precisely. Deposits from various fraud cases. And then comes the modern twist.
The crypto part.
Right. Once the cash was sitting in those stooge accounts, the next step was converting it into cryptocurrency. They used various crypto exchange shops for this.
Ah, the physical exchange shops. Interesting.
Yeah, and doing it cross-border like that, moving funds between jurisdictions and into crypto, that was key to trying to hide where the money originally came from.
Makes sense. You take traceable bank transfers, funnel them through hundreds of accounts, then push them into crypto, hoping the trail goes cold.
Exactly.
And we know some of this was definitely linked back to real victims, right? The reports mention fraud cases.
Yeah, over $1.2 million of the laundered cash was directly tied to 58 different reported fraud cases.
So real people getting hurt by the underlying crime. It's not just numbers.
Definitely not. And, the fact police could link it back even with the crypto step shows investigators are getting savvier, too. It's a constant cat-mouse game.
So how did they actually get caught? The reports had some pretty specific details, almost like a police procedural.
Yeah, it sounds like police had them under surveillance on May 15th. They were literally watching the base in Mong Kok.
Okay.
And they saw 2 of these recruits leave the building. One heads off to a bank.
Probably making a withdrawal or deposit.
And the other goes to an ATM, so coordinated cash movements. Then, crucially, both of them went to the same place.
Let me guess. A crypto exchange shop.
You got it. One in Simshad Suvi. And that's where the police moved in.
Caught them red-handed.
Pretty much. Arrested those 2 right there at the exchange shop. And they seized cash before it got laundered, about HK $770,000. So nearly $100,000 US.
Wow. Intercepted mid-transaction almost.
Kinda, yeah. And then based on that, they rounded up the other 10 suspects, aged between 20 and 41.
And they must have found more evidence.
Oh, yeah. Big seizures. Another HK $1.05 million in cash, about 134,000 US gates. And listen to this, over 560 ATM cards.
560.
Yeah. Plus multiple phones, bank documents, and importantly, crypto transaction records. Basically dismantling the whole setup.
That sheer number of ATM cards is mind-boggling, just the logistics of managing that.
It shows the scale again, doesn't it?
Yeah.
And then something else interesting came from Senior Inspector Sekhalin from the Commercial Crime Bureau.
Oh, what's that?
He mentioned that suspects often weren't just recruiting strangers, but using bank accounts belonging to their friends and family.
Oh, wow. So exploiting personal relationships and trust, that adds another layer.
It does. It makes it seem less suspicious initially, maybe? or just easier to coerce people. It's a tactic that, well, it leverages the human element.
Yeah, it makes sense. Even with fancy tech, exploiting basic human connections is still effective for criminals.
It seems so.
And this is happening against a backdrop of rising fraud in Hong Kong generally, right?
Yes, the context is important. Reports say fraud cases were up 12% year-on-year in early 2024.
12%, wow.
And over 10,000 arrests linked to fraud already this year. And get this, around 73% of those fraud-related arrests involve people holding these kinds of Stooge bank accounts.
73%. So this isn't just one gang's method. It's like a standard operating procedure for fraudsters there.
It certainly seems like a widespread and critical part of the fraud ecosystem they're trying to tackle.
Which must be a huge challenge, especially when Hong Kong is also trying to, become a legitimate crypto hub.
Exactly. That's the real tension here. How do you encourage innovation and build this digital asset center?
While also stopping criminals from exploiting the very same systems.
Precisely. They're trying to walk that line. They've been rolling out a crypto regulatory framework.
Right. I remember seeing things about new rules for exchanges doing staking back in April.
And there was a broader roadmap announced before that things like improving market access, better compliance, more products, but also strengthening infrastructure and industry relationships, trying to build guardrails.
So this bust kind of highlights the challenge they're facing in real time.
It really does. It shows how these operations try to slip through the cracks between traditional finance and the newer crypto world, exploiting that intersection.
And it brings up the role of the crypto exchanges themselves, doesn't it? Especially those physical shops taking cash.
Absolutely critical. What's their responsibility? How robust are their checks? KYC, know your customer, and AML, anti-money laundering procedures.
Yeah, you'd think large, frequent cash deposits going straight into crypto would be a red flag.
It should be. That's where the exchange's own systems and reporting have to kick in, alongside the government regulations. They're the gatekeepers, in a way.
It's also just striking how, despite the crypto element, so much of this still relied on the old tactic of just having lots and lots of bank accounts.
Yeah, the Stooge accounts. That fundamental method of layering and obscuring funds hasn't really changed, even if the final step involves crypto now. It's still about breaking the chain.
That blend again. Old methods, new tech.
Exactly. The human network, recruiting and managing those individuals, that remains a core vulnerability they exploit, whether the money ends up in Bitcoin or stays in fiat.
Okay, so let's try and sort of summarize the key takeaways here. This Hong Kong bust, it's a really clear window into a pretty sophisticated operation.
Definitely sophisticated. Combining traditional banking tricks like the Stooge accounts with cryptocurrency to make the money harder to trace.
And it underlines that constant battle, right? Criminals evolving their methods, law enforcement and regulators trying to keep up.
Yeah, and the huge challenge for regulators trying to build rules for this fast-moving crypto world without stifling it, but also without leaving the door wide open for crime.
It shows how criminals are constantly probing for weaknesses, whether in old banks or new crypto platforms.
And it really stresses the need for, constant vigilance, adaptable regulations, and definitely international cooperation, because these things rarely stay within one border.
So maybe a final thought then for you listening. As crypto keeps growing, keeps becoming more mainstream, how do law enforcement and the rule makers actually stay ahead? How do they counter these complex schemes that just jump between traditional finance and decentralized tech so easily?
The massive question.
And maybe also, what's the responsibility here? Not just for governments, but for individuals, for the crypto platforms themselves. How much onus is on them to actively prevent this kind of illicit activity from embedding itself in the system?
That balance between innovation, privacy, and security. It's something we're going to be grappling with for a long time.
Definitely something to think about. It's going to shape a lot about finance and crime fighting in the years ahead.